Hello, I'm Helen, Senior Market Analyst. It's Thursday 18th of September and I just want to today give a bit of a run through as to where the market's moved over the past month or so. Really, grain markets have continued on the trend that they started off on in May this year, moving further down to back to levels now that we haven't really seen since 2008 and 2009. There was a particularly sharp drop around the 10th to 12th of September, which occurred sort of around the time the USDA updated their estimates of world supply and demand for grains. There were substantial increases to both supply and demand, but the level of the increase on the supply side of things far outweighed the increase on demand, and that really just added additional pressure to markets. It's as harvest progresses and markets become more certain of what's going on and what the harvest is looking like, it's really removing some of that doubt, and that's why we saw this drop back down to sub 120 and now even approaching below 115 kind of mark price levels. I just want to focus a little bit more on the USDA report, because one of the key features in that the market was watching was what would happen with US maize yields. The US maize crop this year is forecast to account for nearly 20% of global grain production on its own. And not only were yields increased to a new record, but they were above what the market was expecting. So this puts us at the situation where we're expecting a record US maize crop, not only bigger than last year despite a smaller area. However, the crop's not in the bag yet. As at last weekend, around 4% of the area had been harvested. The net result of that, we're still likely to see a little bit of sensitivity going through the following few weeks as harvest progresses and we see what's coming out, and the small amount of risk remaining to those remaining crops. Looking now at oilseed markets, supply expectations remain strong in this market as well. The latest forecast from the USDA pushed global oilseed production further into record territory, with the US soybean crop also expected at a new record, due to a combination of record yields and record area. The US soybean crop is expected to account for nearly 20% of global oilseed production, so it's a key part of the market that we're waiting to see what will happen, with harvest due to start in the coming weeks. I suppose the global oilseed market is a little bit more uncertain than the global grains from one perspective, because the other major exporter of soybeans across South America, planting is due to get underway in the coming weeks there. Record crops are expected again, as mainly due to an expanded area, as the price relationship between soybeans and maize continues to favour the oilseed. So in summary, the market remains very supply focused at the moment still. But we have a lot more confirmation and a lot more certainty than we did a month ago, as harvest and crop reports continue to come forward showing yield results. The sort of key bits that we're watching at the moment are the progress of the US maize harvest and US soybean harvest as it gets underway. With planting starting in South America for their maize and soybean crops, also be watching progress there. And the Australian wheat crop is soon to enter its key yield forming period as well, which can be a useful top-up supply or useful extra supply as a key exporting nation. But we are starting to see more attention coming through on the demand and trade forecasts as well, and how those are starting to progress as we get early season progress. One key aspect of this sort of other side of this balance sheet is the end of season stocks figure, and on 30th of September we'll get end of season stock numbers from the US. This is a report that has been known to cause volatility in the market in the past, so it's just something to keep an eye out on. In the meantime, we'll keep up to date at hgca.com/markets or follow us on Twitter.